From all the different conversations I had with people over the years, I think that's the best beginning in terms, everyone is like, oh, let's talk about this hobby and, I'm marathon, I do this, I do that. For you, it's like, no, I'm boring. It's like just being very straight about it. I don't do anything. That's your motto, basically. That's what you're telling me.
Insurance is exciting enough. I need to find the opposite of exciting activities to balance it out. Yin and yang, you know?
Yeah. Dealing with risk on daily basis, you need to come down. You cannot just do risk, and then, I'll go with scuba diving or jump off a plane. Yeah, you need to relax. So
Exactly.
how do you relax?
Well, in my spare time, I love to be outdoors. I especially love mountain biking, skiing. Here in Northern California, where I live, we have a lot of those available to us. So I'm pretty fortunate. And it just helps me sort of like calm my mind and
Mm-hmm.
feel good to keep having energy to keep going. Um, and then, yeah, enjoy spending the times that I'm not active sort of with my family and doing pretty low key things like cooking are just sort of like ways to relax, sort of like a meditation for me.
By the way, that's a very cool swag from Accelerant.
Oh, thank you. Yeah, the accelerant is the best. And not only that, you're gonna get the whole story right now. I've got a
Nah. I don't care about those ones. The story, yes. The story, yes. But I have so many of those battles. The best one that I have is actually from, where is it? Too far away.
nice.
Okay, that's enough for nonsense and a little bit of warm up. Let's talk about you. How about Bobby? You'll start with a little bit introduction. Tell us about what do you do now, where you're coming from, and then we'll talk about you being a serial entrepreneur and all the other things that, all the follow-up questions that will be from there.
Sure. So, and thanks again for having me. So, grew up
My pleasure.
in the Boston, Massachusetts area originally. Went to college in Montreal. I went to McGill University, where I met one of my current co-founders, and studied business and economics in college. And I didn't realize until I went to college that business and economics are actually very different things. And by studying them both at the same time, I sort of got a perspective on that. And then graduated and worked in a number of different jobs, worked in early stage investing, worked at an incubator, was sort of like trying to learn as much as I could about startups. This is in 2008, 2009. Um,
Mm-hmm.
so quite a while ago. And then moved around the East Coast and then moved to the San Francisco Bay Area in 2017 to join an incubator where I started my first insurance related company. And yeah, the rest is history. Fell in love with the industry, made a lot of good relationships and friendships. And today am spending basically all my time when I'm not mountain biking or cooking or spending time with my family running Rainbow, which is a new MGA focused on the small commercial insurance market.
And listen, Rainbow is going to be the main topic for today's conversation because, let's give love to the current company. But couple of steps back. So what made you go into the insurance industry? What was your first company and why?
So I had moved to San Francisco to join an incubator called HVF Labs. And the incubator was founded by Max Levchin, who's now the CEO of a firm, originally the PayPal founder. And the incubator had a unique model where they would bring in experienced founders, what they would call entrepreneurs in residence. And
Mm-hmm.
generally speaking, they would try to encourage those founders to start companies. And there was sort of an unfair advantage to starting businesses in financial services just because of sort of the ecosystem of helpers and sort of like capable minds that wanted to support these types of ventures. So as me and two other people who became my co-founders were thinking about parts of financial services that we found interesting, commercial insurance was one that was interesting to us because we really didn't know much about it. And so the unknown was sort of every day. We felt like there was lots of room to get better and smarter, and we really liked that challenge. And so that's how I sort of started to pay attention to insurance. And then early on, one of our conversations as we were trying to talk to the market, talk to brokers, talk to underwriters, we started speaking to some of the folks at Chubb and learned a lot about the surplus lines insurance market, which I absolutely knew nothing about, and learned about Lloyd's of London and how it operates. And again, just sort of got pulled little by little into the story of insurance and decided that we wanted to start a company that made sense in the context of some of the inefficiency that the insurance industry experiences in the specialty world,
Hmm.
but also a lot of the value that we feel like could be created or unlocked.
Can I
And
stop you here? Do you mind providing a little bit of, let's call it, a dictionary definition of what is the surplus lines? Why is it difficult? What's the difference between admitted and non-admitted? Because audience, a new audience, who's, as you said, not a lot of people know what it is.
yeah, so yeah, I'll just take a big step back and I'll just give my quick overview on insurance that I always give. So basically, if you think about insurance having three big categories: property and casualty, life, and health, all we're going to talk about today is property and casualty. I don't really know anything about the others. I don't really know that much about property and casualty, but it's the one I know most of. Then within property and casualty, you have two big buckets: personal lines, like your home and auto, and then commercial lines, insurance for businesses. And then within that, you have kind of like three buckets of risk: small risk, middle market or medium, and then the large risk placements. In the US market, which is the largest insurance market in the world, there's basically two types of commercial insurance policies. There are admitted policies and non admitted policies. Admitted policies have support from state guarantee funds that basically backstop the carrier in that state. If that carrier was to become insolvent, you as the policyholder would still have some protection if there was like a huge loss scenario. Whereas in the non admitted market, you don't really have that backstop. It's a much more free market. It's far less regulated than the admitted market. And that's a big deal, especially as a startup, because insurance, unlike many other financial services in the US, is regulated at the state level. So to sell an admitted product in 50 states, you have to get approval from 50 different departments of insurance. So specialty insurance, often sort of synonymous with excess and surplus lines or surplus lines or non-admitted, they all mean the same thing. Those are going to be insurance typically for those higher risk or more distressed types of risk. So if you have just as an example, a restaurant in the middle of a city that's nowhere near a coast, you can probably insure it on an admitted policy. But if you had a restaurant that's in South Beach in Miami, which is right in constant hurricane zones, that's going to be harder to get an admitted policy for. You're going to have to go to the non-admitted market. So my first company focused on the non-admitted market and being a distributor of those products. This one focuses on the admitted market and underwriting those types of businesses.
And by the way, this is going to be part of the follow-up questions once we talk about Rainbow. But let's talk about, so first of all, thank you very much for the definition. So
Sure.
people can be on the same line with where are we going? So first startup, you ran it for 6, 7 years. What did you guys do?
My first startup ever, or the previous?
In the insurance,
Yeah.
your previous insurance company.
So the previous insurance company, I was running that for about 5 years, starting in 2017. The company is still existing and doing very well today. And that company is a broker, a producer of small commercial insurance in the surplus lines market. So the software is a quote bind issue platform, and the products that are available for sale through that quote bind issue platform are the API enabled products of other carriers like Crum and Forster and Chubb and Hiscox and Beasley. And a retail agent will traditionally will contact a wholesale broker or a surplus lines broker, same thing. And they're going to give them information about a risk that they need insurance for. And the surplus lines broker, who has unique licenses and therefore has unique access to surplus lines markets, is going to contact the different markets or carriers and say, hey, do you have an appetite for this risk? What we do is we streamline that process dramatically. Now a retail agent can just enter those informations about a risk into our online platform, and we send that information into the carrier records of multiple carriers that are available via API. And we basically act as the broker on the transaction. So that's what that company does. It's called Pathpoint. When we first started it, it was called Outline. And yeah, that's what we do.
Perfect. Now, you ran it for 5 years. It's still ongoing.
Yep.
Why it's so needed? Because I have conversation with many wholesalers, and I usually see that as providing a solution for the long tail of the industry, especially for the retail agents who cannot get appointments. They don't know how to sell, so there is a lot of education. They need to have 20, based on the number of appointments, so many different browsers are open. How did your technology help them to get more business and basically increase their book of business?
So I think everything you said is definitely true in terms of the value that a good wholesale.
My job here is just to set it up for you to crush it down.
To crush it. So what we really focus on is, so there's two things. First of all, in the last 10 years, the E&S market has played a more and more important role as large admitted carriers have pulled back their appetite. So what would normally have been in appetite for a traditional carrier like the Hartford or Travelers or another one like that, over time, depending on the performance of their book, those underwriting companies are going to say, we don't want to write this type of specific risk anymore. But that risk is still going to exist in the market. It's not like those businesses stop existing. So now those businesses have to get their money from the surplus lines market. Back to what I was saying about sort of three sizes of risk, there's this expression that, a $5,000 policy can take the broker as much effort as a $50,000 or even $100,000 policy in terms of premium. And so obviously when you're a broker, your time is money and you want to process that smaller business as efficiently as possible. And it's not just that you don't want to be involved with this business at all, because the small business is actually very sticky. So it's a very healthy way for you to build up your revenues. But you have to be able to justify the amount of time you spend touching it. So whereas what we focus on the small segment is called binding authority. Whereas the traditional binding authority risks in the old model might have taken, a retailer days, if not a couple weeks, to get a bindable quote. With Pathpoint, retailers can themselves get a quote in just a few minutes. And Pathpoint acts as the licensed surplus lines agent in the transaction. So it's about ease of doing business for the agents. It's exactly like you said, giving them access to more markets for the risk that they have, and ultimately, hopefully, making them a better agency by sort of increasing their scope without increasing their overhead.
So, Pathpoint, that's in the past. You finish your position there. You decided, instead of me doing, I don't know, the Appalachian Trail or kicking back on a beach, you know what I need to do? I need to start another insurance company. Yet another start. Let's call it a company, not a startup, unless you prefer to see it as a startup. And there you had this. Yeah, I see this problem. I think I can solve it and do it better. And basically, you kickstart Rainbow. What's Rainbow? What's that about?
Yeah, so the previous company, Pathpoint, sells other carriers' products. We didn't have any of our own Pathpoint specific products. But the idea of having specific niche products was always interesting to me conceptually. And as I looked in the surplus lines world, there were sort of two things I observed. One, there were a lot of MGAs, managing general agents, that no one's ever heard of. Like even the policyholders don't know the name of this business. But they're great businesses, hundreds of millions of dollars in premium. They might not be based somewhere where you expect, but they have a great, great business, good reputation. Agents love them. To me, that seemed very attractive. To your point, as a company, as a business owner, that's the type of business that I wanted to own. And the second thing that I saw was, and what I noticed of those is that the businesses were highly specialized in their underwriting typically. They tend to be really good at underwriting specific types of business, right? But they were doing this all largely without the use of software or technology. The other thing that I noticed was that since we were working with retail agents and we were focusing on the smaller risks, I got to learn a lot about the small commercial PNC market in the US. So again, this is like the Traveler, State Farm, Hartford of the world. And what I learned was that it's a very big industry, 130 or 140 billion dollars a year in premium. It's a very fragmented industry. Even the largest players may only have 5% market share. And it's a business that has been profitable for a lot of the carriers. And like I said, it tends to be very sticky. What I mean by that is a small business owner doesn't want to every year think, okay, now I'm going to go from Travelers to CNA or from CNA to Liberty Mutual. They just don't want to think about that. They want to have their coverage. It's a mandatory coverage for most of them, and they just want to move on. So these different topics were sort of starting to come together in my brain, as you said, as I was not on the Appalachian Trail, but hanging out in my backyard. And I thought to myself, why aren't there more MGAs that are focused on the admitted market within small commercial, but taking the approach of applying software to a very specialized underwriting focus? Um, and so that's like at a high level how I started to think about Rainbow. All of the companies in the market right now, we all follow the industry. There's enormous pressure to demonstrate profitability, healthy loss ratios
Mm-hmm.
are going to be sustainable. And so one of the ways that I thought about doing that is how are we going to be more specialized and have expertise in underwriting specific classes of business rather than saying we have a very broad appetite for tens or even 100 different types of businesses and we're going to insure them all through our online platform. So that's really where the idea for Rainbow came from. And we chose restaurants as our first segment. So basically, I looked within small commercial, and if you look at the big pieces, it's like sometimes somewhat vague terms like contractors is a huge segment, retail is a huge segment, hospitality, medical, and then if you look within hospitality, there's food and beverage, and there's hotels and motels, basically. It's not exactly the best property market right now for reinsurance. And as an MGA, we need reinsurance to exist. And and so I started spending more time on food and beverage. And like I mentioned to you, I love cooking and I love food, and so I just sort of emotionally like the idea of restaurants. It's also a category that traditional carriers have really pulled back from over the last
Mm-hmm.
several years, and COVID has made that especially difficult. So all of this like challenge, call me crazy, I guess, but was just very attractive as an opportunity to try to build a more streamlined way of doing business in a category that, like, it's not going to go away. We're going to keep having restaurants. And it just seemed like a good opportunity as a way to get started.
What's the secret sauce for underwriting restaurants? Because we've seen that, let's call it part of the risk appetite for so many different carriers that keep changing all the time, right?
So I think there's two things. One, and we try to do both of these things at Rainbow. One is, and they're going to sound pretty fundamental, but because I think they are, right? The first is have a better understanding of what you are actually underwriting. So we would hear from lots of capacity providers. We like restaurants as a category because it's large and it's growing and it's evolving, but we don't like it because we're often self-conscious about what we're actually on risk for, right? Like we will underwrite a business that says that they close at 9 p.m. and that never has happy hours and that never has live entertainment. And then when the risk would be coming up for renewal, we would see that the risk has actually changed quite a bit. It's now open late. It now has happy hours every day of the week. It has live performances 3 or 4 times a week. And that's difficult for carriers. And they don't, most carriers don't like being surprised. And so they really don't like seeing that what they thought was one type of risk is actually another. Because a lot of the things that I'm describing, of course, would impact not just the premium, but whether the carrier would want to write that business at all.
Wait. How happy hour impacts the risk?
Well,
Out
if you,
from, just curiosity.
sure. So if you're underwriting a business that is a neighborhood restaurant, let's just say,
Mm-hmm.
in the financial district, for example, and you think that their primary business is selling sandwiches at lunchtime and maybe doing some dinner catering for professional events, the nature of that risk and the liabilities associated with that risk are quite different than if there's all kinds of alcohol being sold. And if they're having like, if they're advertising, hey, come here and get cheap alcohol during like a happy hour period, for example. Another thing is if you think that they're only really open until about 5 o'clock and then they close, and now they have happy hour from 5 to 7 o'clock. Also, the longer the business is open, the more surface area there is for any kind of liability to happen. And that's ultimately what the underwriting companies are trying to get a handle on. And so when that changes, ultimately the risk has changed and the price for that risk and the coverage needed for that risk changes correspondingly.
Now, shifting from non-admitted to admitted,
Mhm.
how did it change your, or let's say in a different way, what's the challenge now for you? We talked about the regulators. We talked about that. Where are you licensed, and did you start writing policies?
Yeah, so we're licensed in, so as an MGA, we're licensed in all 50 states. And however, for the restaurant program, we're currently focused with our reinsurance partners, who's Accelerant, on 26 states. And you can see that on our website. And we're currently live in 5 of those states: Arizona, Texas, Indiana, Michigan, and Utah. You might be saying, like,
Classics.
why these states? But yes, exactly. They're large-ish states, some bigger than others, in key parts of the country as we sort of backfill our footprint. Um, Texas is one of the three largest markets in the country. It's one of the largest insurance markets in the world. And I would say that the challenge that we have faced is very typical of admitted products, which is that you said it yourself. We have to go through the process of the regulators, which can at times be somewhat opaque. It's not always as fast as we'd like it to go as a company that wants to sort of move quickly and learn and use those learnings to sort of inform what we do next. So I would love a crystal ball for all the regulators in the United States. That would be really helpful to me, and I think a lot of people. But those are some of the challenges that we've faced in getting live. And again, I would say that that's pretty typical of any company writing admitted business. We have started writing policies. We wrote our first policy and we went live in late July, and we wrote our first.
Congratulations.
Thank you very much. And we wrote our first policy not long after, in the first week of August. And at that time, we were only live in Arizona. And then shortly after, Texas went live, meaning that it was approved by the regulator. And then since then, August is obviously not that long ago. Since then, we've just been rolling out additional states. And we expect to really increase the pace of rolling out in additional states now. So for the next, call it 6 or 8 weeks, we're going to be live in another almost 10 states. So we're going to
And
grow quite quickly.
are you selling direct or through agents?
We sell 100% through agents. Selling direct was another one of those things that I observed had proven to be quite difficult for newcomers to
Mm-hmm.
insurance, especially in small commercial. Most of the
Yep.
companies that were newer companies that are not part of a large existing established company that started with a direct distribution model have more or less all gone to agency distribution. And for good reason. I mean, in the US, roughly 80% of small commercial insurance is still sold through agents. Agents play a really important role. And most importantly, really, agents play a really good role, or an important role, in building high quality and profitable books of business, right? So most business owners are going to be really good at, hopefully, their business, right? So if you run a pizza shop, you're going to be really good at the secret sauce, like you said, that you use on your pizza, or the toppings, or whatever. You make a good product. Knowing what insurance coverage you need exactly is not going to be something that most business owners, unless they're quite experienced, are going to have expertise in. So what you wouldn't want to do as an underwriting company is to be selling directly to that pizza shop owner, who's just going to look for, a lot of times, the quickest, fastest, cheapest coverage and then move on. And the reason you don't want that is because then when they have claims and they're like, oh, I'm not covered for this, this, and that. I thought, as a pizza business, I would be covered. And that's what ends up having the very adverse effect on your overall portfolio. But agents play a really critical role. They'll sit down with the pizza shop owner. They'll say, oh, you have these special equipments that you use that's unique to you. It's part of your value proposition. You should insure that in case something happens so that you're not, out of pocket. Just as an example. So we think agents play a critical role in our goals and in small commercial in general.
So beside, establishing the relationship with the customers, retaining the customers and making sure that the book of business is still running and developing, what's the role within the claims process? And how do you make sure that you keep, let's call it good risk and not entertaining more bad risk?
Yes. So there's a couple things.
And the main reason I'm asking that, because we've seen now, part of the trend is that we see more and more MGAs, niche MGAs that focusing and specializing in one thing. It's part of the lesson learned over the past 7 years. And yep. MGAs are measured by their loss ratio, which you already mentioned earlier, and yep. not combined ratio, etc. So that's kind of trying to focus on that part.
Yeah. So you actually touched on something that I forgot when I was talking earlier. So I want to come back to it because it relates to what you're saying. The two things that I think are different for insuring restaurants is, first, feeling better about what we're insuring at the time of policy issuance.
Mm-hmm.
And the second piece is continuing to observe that risk over the life of the risk. So that's another thing that is quite different.
That's important. Yeah.
Right? Most traditional carriers are not really every 30, 60, 90, 180 days thinking to themselves, hey, what about Bobby's Pizzeria? I wonder if and how they've changed. Let me go have a look. They're just not doing that because they're either too busy or culturally that's not what they think to do. So we are continuing to monitor using available information online about the businesses, trying to understand, are things changing about the business? Do the hours of operation change? Do the things that they advertise change? Are there different images online or reviews associated with that restaurant that could help inform us from an underwriting perspective? And how could that notify our underwriting team? If the risk changes, right, if it goes from a risk that doesn't have one of our exclusions, meaning certain kinds of live entertainment, to having those types of live entertainment, that's an important opportunity for us to have a dialogue with the agent and understand, hey, what's changed? This risk is not what we thought it was. And that's an opportunity for us to maybe protect ourselves if the nature of that risk is going to be different and end up having poorer performance on the overall portfolio. So that monitoring, or continuous underwriting, as we call it, is something that we think is really important. And I'll give you another specific thing we're doing that's kind of interesting along those lines. From a claims perspective, when you buy a policy from Rainbow, you as the business owner get a dashboard where you can access a copy of your policy. You can also initiate a conversation with your agent through the Rainbow platform, and it will notify the agent on their version of the Rainbow platform, the agent dashboard, and you can also file a claim. So you click a button, you answer some basic information, and it kicks off the first notice of loss process with our claims partner. And we, the platform, I should say, and our underwriting and service team will sort of monitor the status of that claim, and we'll keep dialogue going with your agent throughout that process. So your agent's always aware of what's happening. They're able to comment and support you, and you as the business owner get some peace of mind through the platform.
Sure. What do you think all the previous InsurTech startups gone wrong? And let's ignore the ones that went public. Yes, we all know what happened there.
Could you be a bit more specific?
That's hard. That's very hard. So we have seen, the lemonade hippos, they went public, just completely lost their value. We can talk about them because there is a lot of public information about them, especially, let's say, Hippo Lemonade route, how they crashed Metro Mile. I don't even, they don't exist. They are part of Lemonade. But with that, there were many other MGA that all just disappeared or were acquired a few cents on a dollar and were bought by other companies. So I just wonder, as part as you as at your research before you decide, sitting on sitting in your backyard, thinking about what's the next step for you. What do you think those startups? Why did they fail? And did you have any, let's call it insight of what you need to do so you will not? It's a hard question.
The first thing I would say is that I think it's a really important question, right? Because we obviously all want to try to, because hindsight is 2020, so it's easy to say like, oh, this
Yeah.
is. I
Oh,
think that
now I think that now it's actually way more. Nowadays, it's going to be even worse because everything went up on 21, 22. People are like, oh my God, what's going on? 23, it's like, are we still feeling the squeeze? Are we going to see a light in 20 at 24, 25? Who knows if we are in front of a World War III? There's
yep,
so much of uncertainty nowadays with inflation, with maybe recession, but still restaurants are blooming. So everything, there are so many moving parts, and
yep,
or as we call it, uncertainty.
yep. So I don't think that any of the companies that I can think of, and again, because they're all private companies, a lot of what I know is very limited, and even the limited pieces are sometimes based on hearsay or speculation.
Of
I
course.
don't think that most of these companies did one thing wrong that led to their downfall. Um, like, sure, you could say that the thing they did wrong is they ran out of money before they figured out how to make the business sustainable. So, at a very
Mm-hmm.
fundamental level, that's true. Um, yeah, I just don't think I mean, I think it's the same things that probably have held back countless companies in. And look, like when I first started in InsurTech 7 years ago, InsurTech was still just like a very novel concept. We would hear a lot of the same things like, oh, insurance is a great market to focus on because it's 20 years behind banking in terms of technology. You'd hear all these things, and you're like, I don't even know what that means, really. Like, how does it mean that? What does it mean? Um, but and I would say that now it's definitely not necessarily the most attractive category to outsiders from operations and investment. So I think it's really important to have investors that understand insurance and insurance tech and that world. Um, because if you look at any other industries that have received way more hype, like crypto, like AI, like whatever, a lot of those companies that were once booming and then ultimately failed again, they could have failed for any number of reasons. The way I like to think about it is focusing on the things that we can control, right? So, the number one most important thing that we have control over, not complete control, but we have control, is loss ratio. You said it. Just not, and specifically, not prioritizing growth of the business over sustainable or profitable growth of the business. And I think of them as very different. Um, so I think that's like really thing number one that we want to be doing differently. If I had to guess, if I went back 6, 7 years ago, most of the companies that have come and gone from day one, their focus was not on profitability. It just wasn't necessarily. I think a second thing that's very different about how I think about things, me and my team, it's not just me, um, is sort of the thoughtful use and development of software. This is another thing that, like, I was always surprised as I got to know more and more insurtech companies. As you sort of peel back the layers of their operations, you'd realize that the business was actually very manually processed because they were able to benefit from a really favorable financing environment. A lot of startups were putting a lot of that cash towards just having humans do things because it was easier than figuring out the software automation. And the problem with that was that over time, those costs really started to hold back the business. And then they have to go through difficult decisions like letting people go. And then that changes the momentum of the company. And, like you said, these startups they're startups, is like what you were saying. It's a very fragile thing. And a lot of what makes the company successful is momentum. And
Mm-hmm.
if you compromise that momentum, you can compromise the whole company. Um, so those are some of the things. I think specialization is another thing that, like you said, other companies have done it and ultimately have not been successful, but um, we feel like it's another way to sort of do the other two things better. By being more specialized, we can think more about applying industry specific data to the underwriting process. Everyone talks about AI and machine learning and data and pre-fill. Most of these companies that are insuring small businesses are just pre-filling the details of, a property from Hazard Hub or something. That's not nothing, but that's like, I
Yep.
don't think that's like a differentiator necessarily in terms of underwriting. And so we use data that's very specific to the food and beverage industry, for example. It would be harder to do that if we insured many, 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 many different types of business, because you'd have all these different data sets, all these different connections you'd have to maintain. Soon it would become very expensive and cumbersome. And it's just hard to grow the business that way. So I think the specialization is really important to helping you with the loss ratio and to building the right software for the business.
Now, we are recording this October 23rd. Next week is ITC in Vegas. Any plans for ITC?
Yes, I'll be there on November 1st and 2nd, and would love to. Hope to see you there. I'm sure I will. We'll see each other as like two blurs because
Yeah,
we'll.
exactly.
But yeah, I'm just excited to see kind of the industry. It's just really interesting. I just came from Target Markets, which is the program administrator conference, and they had this really interesting stat that every year since Target Markets has started, more or less, has been their biggest year ever in terms of attendance. So the chart only goes up and to the right. And I'm sure InsurTech Connect is the same thing, right? Like the attendance only
Yeah.
increases every year. It's interesting to see at a time when it's going to be its best attended conference ever, the biggest show ever, biggest exhibit hall, everything. You just hear in the market that like, oh, people don't know about InsurTech. Like you said, most of what the broader market really knows are the publicly traded companies, and they have a sense of, the public has a sense of the challenges that those companies have had. So it's interesting to at one time see that the industry at large seems to be booming, but the consensus and the attitude of the market is not necessarily exactly the same. So it'll be interesting to see those folks, talk to those folks, and it's definitely, like everyone always says, at the beginning when we were starting, they're like, oh, software for surplus lines, that's not a good idea because, in surplus lines, it's all
Brilliant,
about
brilliant.
relationships. It's all about relationships. That's how this industry got started. And we would say, of course, the relationships matter, but like, if there are better tools to do the business, isn't that a competitive advantage? Isn't that a good thing for you and ultimately for your clients? And I think over time we've shown that that is the case. So it's just good for me to see other people in the industry. It's a little bit like therapy too. You get to see other founders and hear what they're going through,
Yes.
and it makes you feel good and it keeps you going too. So yeah, that's what I'm looking forward to.
Fantastic. Okay, let me ask you the last question that I'm asking everyone. Can you give our audience a word of advice, something, let's call it a word of wisdom, if you like to call it?
A word of wisdom. Um, if you are, I have a two-part statement. If you're an insider, like you're in the insurance industry, continue to give technology a chance. I talk to lots of people who say, oh, yeah, we saw InsurTech start, and then sorry, that's my dog. InsurTech start, but then it hasn't really survived, and who knows, it's going to go away. I have news for everyone. Software is not leaving insurance. There's only going to be more of it. I encourage you as an insider to think about how software could make your life better and could ultimately make
Mm-hmm.
insurance better for your clients. So that's what I would say to insiders. And I would basically say the exact same thing to outsiders. If you are wondering about insurance, you should know that it's an incredible industry. The people in it are so genuine and hardworking. They really help each other. And there's a reason a lot of folks stay in the industry their whole career, and their parents were in the industry, and their parents were in the industry, and their parents were. This is a truly incredible industry, and insurance underpins everything around you in the world, especially in America. Absolutely everything around you. So it's very
Uh,
important.
Absolutely, I agree with you 100%. I would even define it, it's a community. So while we say usually that insurance you do it's very relationship oriented. We actually have communities. And besides, I've been doing InsurTech LA for many years. I've been slacking a little bit in the past 2 years, I admit, in terms of events in Los Angeles itself. Been participating in many other events around the world. But you see that it doesn't matter, London is a big scene, Europe, Tokyo and Singapore are growing up. It's just amazing how at the end of the day, globally, you meet the same people. There are also, by the way, one of the things that excite me about this ITC is that there are so many new faces, people that I haven't met yet. And we're like, yeah, those were like my first people on the platform, on the ITC platform, reaching out. It's like, we've never been met before. We'd love to learn what you're doing, see how I can help you, any collaboration in terms of investments or other things in that space. But yes, sorry, that was my thing. So, Bobby, thank you again. Thank you very much for joining me today. It was a pleasure, and see you in Vegas.
Thanks, Gilad.